Erwin.
Hi.
Thanks everyone for making us to this early morning session on nailing the first 100 days as a startup CFO or a senior finance person. And Jan and I, both from Everphone, are very glad to present to you a topic that has come to us both in the last few months. I recently completed my first 100 days. Jan completed his first, I don't know how many, 45
45
probably.
days. Yeah,
So
45 exactly.
running up to 100 very shortly. And that's how we initially met and discussed the topic and thought it would be a topic that might be of interest to more people. And that's why we're presenting today. So let me give you a short intro into ourselves. I'm Veronika. I'm CFO and MD of Everphone. I originally studied law and economics. This was a combined line of study at my University of Augsburg. I did an MBA in Dayton, Ohio, and did a PhD because just they couldn't get my final grading letter ready because I was the first to graduate. Then I joined McKinsey in the finance practice because I had done quite a bit of capital market law and it seemed fitting. Actually, the idea was very good, but in the end, it turned out that joining a consultancy in the midst of a financial crisis, 2008, wasn't so smart at all. That's why I left relatively shortly after and started out of total chance in a full-service leasing company. I built up the regulatory department there, then developed into accounting, a bit of collections, managed Karstadt insolvency, did a bit of M&A work, and finally sold off that full service leasing part in an asset deal and did a management buyout of the fleet management component together with another member of management. We sold that company to an automotive bank, and for the next few years, I would lead both companies in parallel, so fleet management and automotive banking, automotive credit. This was the ideal starting point to become CFO of Cluno, which was a German car subscription startup in 2018. And we did an exit to Cazoo, the British online retailer, in 2021. I introduced for them the Cazoo business model of used car sales in Germany and in France. And then it was actually a good time to leave. And that's why I joined Everphone in May of 2022. Heading again the finance, the legal department, and recently taking over also HR. In my spare time, I not only have cats and chicken and bee, but I also do some speaking work. I'm an advisory board member and have a lot of activities around sustainability and the like. Over to you, Jan.
Yeah, I guess now everybody knows why I wanted to work with you in the first place.
Sweet of you.
I think impressive CV. Yeah, my name is Jan Kalmer. I'm a director of finance at Everphone, quite new. I just started in August. But back in the days, I studied economics at the Freie Universität here in Berlin. And after that, I started directly at PwC as a consultant for the banking capital markets. As this wasn't, let's say, my lifestyle I wanted to live, I quickly changed to Zalando and had a great opportunity there. I worked in the treasury department, was one of the first employees in the treasury department, helped building it, was responsible for the group liquidity planning and cash management, helped implementing SAP Treasury TRM. And yeah, after nearly 2.5 years, I changed from there to Outfittery and have been at Outfittery for 5 years or over 5 years, worked closely with the CEO, Julia, and in the first years also with Anna, who founded Planetly. And yeah, I guess this was a great learning curve that I had there, and I was responsible for accounting and treasury at the end and interims-wise for the controlling. So I guess the next step for me was to be fully responsible for the full finance department, and that's exactly what I did at Scoutbee. And yeah, at Scoutbee, I was for 3 years the director of finance, led the whole department, was a member of the board as well, and yeah, made some experience there. And I guess now it's time, before we discuss how Veronika and I met and how we work together, I guess we shortly introduce our employer Everphone. And yeah, Veronika, back to you.
Yes, indeed. So Everphone is a device as a service company. We offer mobile phones, tablets, and laptops to our B2B clients throughout Germany, but we also have an office in Miami from which we serve the US. And basically, from our two offices in Germany, which is Berlin and Munich, we can serve pretty much every country throughout the European Union. We were founded already in 2016. Did a slight pivot because usually the service was thought for B2C customers. So the switch came in 2017. And from then on, we steadily grew to a team size of roughly 270 now. We are really multinational. Our team has 40 different nationalities, which means that English is company language, otherwise we couldn't function. We have a big warehousing team. Those are the ones that are staging the phones, that are making the packages and including everything the employer wants us to send to their employees, so that whenever ordered, a new employee or an employee who broke his phone can receive his parcel within the next 24 hours. We have received quite a lot of funding, also did a recent Series C2 extension of 32 million, but the most part of our funding is debt because each device that is owned by us and is handed out to our customers is debt financed. So we built 4 large asset-based financing structures, of which we still operate one, the biggest one of 120 million. Our active rentals is currently around 250K. I can't display you any shiny logos of customers, but there are a lot of big four accounting firms. There is one big automotive based in Munich. I really don't know who that could be. There are some insurances among those. There are also smallish businesses, startups, delivery services, and the like. So a whole wide range. And some other thing to mention about Everphone, we're sustainable by design. We reduce by offering our customers one phone instead of two phones by separation of a private and a business partition of their phone and staging accordingly. We repair all devices and refurbish them for the secondary market. And of course, we also offer second-hand rentals. So for customers who are cost sensitive, we offer second lifetime to the devices. I guess that's everything to say about Everphone. If you're interested, feel free to reach out to either of us. And over to the real topic of our talk. How did we meet and why did we think our challenge is a common challenge? Jan, over to you.
Yeah, how did we meet? Veronika and I have been introduced by the former CFO of Everphone, Benjamin Bremer. Thank you for this again, Ben. And yeah, I guess our first call was legendary, I would say. We directly had a connection.
You talk too much.
No, I think this was a really good call.
Yes, it was.
And this was the point where I decided, yes, I want to work with Veronika. And after that, we had the opportunity to meet in several communities. And yeah, Veronika there started asking questions. How do you prepare? And yeah, what was our challenge? Our challenge in the end was we start a new job. We're standing in front of a new challenge that we may not know what's really coming. So yeah, this was the common challenge. And the question, why is this important for others? I guess, Veronika, you can answer that because that's also the reason why you founded the working group.
Yes, indeed. So from me asking who else is switching jobs and who else is interested in having a working group in preparing, we shortly found 5 like-minded team members. We are currently meeting every other week. We are working on a white paper, and we thought, well, all of us switched jobs recently. The last one, I guess, early September. And the preparation we want to do to be well equipped for the new challenge, for the new job, for the new team is probably one that is relevant for many of you. And that's not also our perception, but also in the numbers. So a recent study suggests that 1 in 3 CFOs or senior finance person is new to the role in a specific year, meaning 33% are switching. However, most of those are not satisfied with the preparation they did. So 61% said they didn't spend the onboarding time wisely in hindsight. And that's a pity because there's a saying, you never have a second chance to make a good first impression. And so if in hindsight you said you didn't spend the time wisely, you probably haven't any chance to correct that and start afresh, which also might mean that nearly 10% of new senior finance hires leave within a year. And that might be one of the consequences of a bad preparation, which all of us wanted to avoid for themselves, but also wanted to give some material to others to avoid that as well. And that's how we come up with collecting topics one should look at, of doing joint preparation meetings and just getting a grasp on the new challenge before we were actually in that new company. Jan, would you like to elaborate a bit on that?
Yeah, I guess you said already a little bit, but I think a key point that we also had in common from the beginning was that we wanted to be prepared. So we believe that preparation is key to success. So what happened was we were asking ourselves, like, how can we in the best possible way to prepare ourselves for the new role? And of course, the role differs a little bit, but in the end, you stand in the finance side always in front of the same topics. And then there is the fact of the unknown, right? So you're joining a new company, you got some information, you have maybe some transparency, but you never know the level of transparency really, right? So we all joined a company and then something was different that we thought, and that's okay. But how can you prepare for this unknown? And this was one of the questions that we said. So what can come up? What will be urgent? And then we started digging, and I think Veronika did a great research there and said, okay, what materials are out there? And she wasn't quite satisfied, I would say. So she said, okay, let's start something. And Veronika, back to you. What did you start and why?
So the way we thought this is there's a certain range of topics you would probably come across as a new senior finance person. Let's split them up. Let's split them up into burning topics. If you don't get them under control real quick, they might cause serious damage to the company. There are still hot topics. Handle with care. Do them at some point in time. And there are those, slowly burning topics that are important because you need the heat to be continuing, but they're not that urgent to do on your first day or in your first week, but should be tackled at some point during your onboarding. And that's how we structured those topics. Whereas the first one of the burning topics, even before the crisis, actually we lined this out, I'd say, in February, long before all those Sequoia papers and stuff happened, was naturally cash. Jan, that's, I guess, one of your specialties.
Yeah, I guess the wording we used was what can make or break the company within 2 weeks or within a few weeks, right? So not 2 weeks, but within a few weeks. And we had a lot of discussions and we rearranged them several times, but in the end we said, okay, get cash covered. Cash is king. This is what you need to focus on. Why? You're joining the company, and if you're lucky, they have a cash reporting, they have a cash forecast, not just the revenue and the P&L. And then you're quite lucky, you can estimate the situation quite quickly. You understand what is important, what the cash in, cash outs are. But maybe you join a company where there is a P&L, where there's revenue, where there is a net income, but not so much focus on cash. And in that case, you need to focus on this, because if you run out of cash, you run maybe out of business, or you get a bad valuation because you haven't the time to prepare. So cash is king, and this is something that you need to get on in the first week, I would say. This is something, get your information. If you don't have anything, check your bank accounts, because they don't lie in the end. And later on, the third part, check your balance sheet. We will go into that as well. But the first is check your balance on your cash account. Understand what the cash ins, cash outs are, and make sure that your run rate is at least 3 to 6 months. And if it's shorter than this, or if you're fearing that it's shorter than this, then you need to immediately talk to the CEO and start an immediate raise, or start looking into debt financing and stuff like that. This is a topic that we have written also in the document, and I think there are also some details, reports that we advise to look into to build quickly. And yeah, I think we have some some good advice there. And for us, it was also important to see the clarity behind that. Yes, this is something that we need to do, whatever there else is. And yeah, the next point we identified goes back to Veronika and profitability of P&L and how you manage that.
Actually, I believe 1 year ago, we'd probably have written understand growth and foster growth and do everything you can to not inhibit sales or conversion or the funnel. This has changed rapidly with the crisis coming up, with equity being a scarce resource. Profitability is key, and the path to profitability is something investors look sharply at. So I guess understanding and managing the P&L is one of the key topics you should be doing, and you should you should take over once you have joined the company. First of all, do you make money? And where do you make it? Probably you have different fields of business where money comes in. You have different fields of profitability and levels of profitability, and you should see that in your numbers. So if we take a practical example out of Everphone, we are renting out our devices, and that's our first revenue stream. It's an MRR for a certain guaranteed time period, and we have certain costs, some upfront, some ongoing, that we can calculate against it. And then we understand if we make money with our core business, which is device as a service and rental business. But then we also have some side revenues, for example, the sale of our used devices. Do we make money there? How can we show to investors that we also have profitable sales? If not, how can we improve profitability? Or is there any factor why we believe that we are profitable in sales, but why we can't show it? For example, faulty depreciation. That's all a kind of clear process we had to do in order to present a clear P&L and in order to make it manageable in a way that everyone understands. Yes, we're profitable in this field, we're also profitable in that field, and to improve profitability, we have to take the following 3 to 6 measures. I guess a clear presentation of profitability is also something that brings success with investors. And if there's any good example, we were able to raise during the crisis, we were able to raise a significant amount and doubling the valuation. So I guess that groundwork really has paid off. After P&L comes the balance sheet, which is also something that is often neglected in startups. I guess P&L is important. Balance sheet oftentimes gets forgotten. So Jan, what can we do to get it under control?
Yeah, I guess I also wonder why, because for me, there are three important things in the balance sheet. That is, does it add up? Yes, you're laughing maybe, but this is something that I've seen in the past quite often, that there were small mistakes, maybe even just forget an account, but it's something that we need to check. So does it add up? And then there's the equity. And if you compare the equity maybe to your cash on your balance sheet, then you can see a gap, maybe, or maybe not. If you're a SaaS company, you might not have a huge gap, but if you're a working capital heavy company, you will have a gap. And this gap exactly shows you that you need to finance your working capital. So check your balance sheet, not because just adding it up is good, but also to see where your money goes and where your money is and where a risk is, for example. Yeah, if you have built up a lot of accruals and you really need them, there might be a potential that you don't need them, but there might also be a risk. Why do you have so many accruals for things that didn't happen now? So you need to check in your balance sheet and understand the risk and also the potential that you can find there. So the working capital gap between the equity and your cash might show you that you have an issue maybe with your accounts receivables, maybe with accounts payables, because you have you pay too fast. Maybe you pay too fast and your customers pay too long, or you have a huge inventory. Maybe your inventory is exactly, negative working capital. Exactly the word that we're looking here. But in general, it's just important to understand that the sizes of these positions in relation to your revenue will have an effect on your cash runway. And this is something where you can also directly affect your cash runway if you look into these things. So there are more things in the balance sheet, but I think the main part for me is always equity, cash, and the working capital, and the combination of this, and we have to understand them. And maybe you don't find any accruals, and in this case you should also go back to your monthly closing structure and understand why we don't have any accruals there. But that's a topic that is for us not burning, but it's a hot topic. So I hand over to Veronika with the monthly closing.
Actually, there's a lot of discussion whether you should at all have a monthly closing. I'd say monthly is probably not mandatory for very small companies. You could do a quarterly closing, but the huge advantage, in my opinion, is that if you do a monthly process, everyone is used to it. You get your accruals straight, you have everyone approving their invoices, you have everyone handing in their expenses, and it's just an easy and smooth process, which enables you to deliver very quickly also your year-end processes and your annual accounts. If you're training 12 times a year, probably the result will be more correct and quicker than if you're training 3 times a year. So I'm totally in favor of doing monthly closings, doing a quick process. Maybe it's not 100% correct each month, but you can wrap that up at quarterlies and then develop into a quick year-end closing. What should usually be done? You should check the process and the results accuracy. If there's no good process and the result is accurate, well, then probably there's some tool support. Probably people know what they're doing. If the result needs to be corrected each month in hindsight, then probably it's not only some process fault, but the input quality is too low, and you need to see why is that process lacking. That's when you come in and install controls. They can be both a checklist or they can be system-based to make sure everything that needs to be done has been done each month. And also a responsible person, a process checklist, and a process description. So even if that specific person is on holiday or on sick leave, the process can run through. Also, during monthly closing, you can easily create buffers such as accruals. You can create timing buffers if needed. If you know that invoices are always late by 5 days, you can factor that in. And creating those buffers for holiday accruals, for sick days, for whichever needs your business might have during the year saves you a lot of calculation in December. And it also saves you that jumping cost and OPEX structures that are often seen in startups in the month of the yearly closing. And that's something, honestly, that's rather frightening to investors. That's bad to explain. So I'd create the buffer, I'd save a bit more than I'd need, and so I'd have some leg room to release accruals in December and to maybe get to a better result than I originally had planned. Monthly closing means accounting for your revenues and your costs, which is good if revenues are coming in. If revenues are not coming in, that's something that's not necessarily your problem, but it's becoming your problem. And that's why we think that as a second potential hot topic, you should check your sales pipeline, Jan.
Yeah, exactly. So why is this important? I guess we all know that without sales, there is no revenue. Makes sense. But you need to understand what the potential is, right? Your history, you see your historical behavior quite clear if you have the numbers. But how is the future looking like? And what do you need to understand this? Do you have recurring business? Okay, cool. Then we can take the sales from the past, can forecast them into the future. Nice. But what comes on top? What is there? And I guess this is the point where we have to look at our pipeline, and we need to understand how the pipeline is built. Is this just numbers? Is there a probability behind this? Is there a clear milestone tracking in there? Because based on that, we can make a forecast, right? If you don't have a clear pipeline with milestones and with clear defined probabilities per milestones in this pipeline, then you can't really have the potential behind your sales pipeline. Why is this important? Because of course you need to give a forecast for the growth, but you also need to understand the risk. So what happens if you don't get that sales in? What comes in? What is gone when, I don't know, suddenly because of crisis, your deals that you have estimated with 75% winning chance will not come. What effect will that have? A, on your cash, but also on your stuff, right? Do you work with freelancers? Do you have flexibility in there? How is your commission model built? Is there a risk behind that? And these are topics in sales that you need to cover, because in a crisis scenario, you need to work with your sales team as well to understand how can we use the crisis, where is it harming us, and where are also cost saving potentials in a crisis. And this is why we believe that the sales pipeline and the understanding of the sales process is super important. But to have monthly closing, profitability, cash flow, and the sales pipeline, you might need a tech infrastructure, right, Veronika?
Yes, indeed. And so this would be our third one. I'm a strong advocate for what I call digital finance, so digitizing everything that's possible and doing manual work in the least amount possible, but rather use the brilliant minds in your team to improve processes, to prepare for future growth, and to install and find those tools that help you out whenever the hockey stick comes in. I guess as a first assessment, you should see which are the tools currently used. Are there tools for everything you do, or are there certain areas that are not tool supported? Do you have a real ERP, or are you still collecting invoices, sending them over to your tax accountant, and they get some monthly closing, some balance sheet out of it? Are you having nifty little side tools besides Excel, which all of us are using, or Google Sheets, to, for example, do expense management, to do travel booking, to reconcile certain positions? Do you have an approval workflow with a specific tool? Overall, you should build a kind of tool landscape where everything with a clear finance usage is mapped. I believe going forward, that would be also something you would have for every tool used in the company, just to understand better what it's used to manage GDPR, to also manage the cost and make sure not everyone just buys the tools they see fit, but it's aligned throughout the company. By painting that tool landscape, you would also want to understand what's the security level. Are there backups? So it might be possible that you do some stuff in tools that are unsecured, but as long as you're doing balance sheet accounting, if you're doing online approval, there should be, of course, a cloud access. There should be a security protocol. It should be made sure that the person logging in is really the person who should be logging in. So single sign-on or double authentication protocols would be some buzzwords you want to be looking at when assessing whether the tech infrastructure of your new finance department is sound or whether it's not. I believe that's a topic that's not prone to any quick changes, but in order to make sure that the company can continue working for the next few months, you should have a clear view on what's here to stay and what probably need to change, so you can create the budget, so you can prepare the team to make an assessment for the next tools you'd need and also prepare for their introduction.
Yeah, I guess, Veronika, was also important is if you're growing heavily, your old infrastructure that was good enough for that might not hold the growth. And that's another part that is very
That's
important
super
here.
important.
So we need to prepare with the tech infrastructure for the next growth phase. And yeah, I think that's the only thing I wanted to add.
Which means we probably arrived at the softly glowing topics. As said, us qualifying them as softly glowing doesn't mean they're unimportant at all. It's just something you should be doing all along. You should be doing during your onboarding, your first 100 days. But it probably doesn't matter whether you start on day 1 or on day 13 or on day 30 if there's something more urgent that needs to be done. Jan, how did you do it? How did you come into Everphone? How did you communicate and create trust and a trust base with your team?
I guess I didn't officially post it in all the Slack channels that have been out there in Everphone. But what I've done is I've spoken personally to everyone in the team shortly. I told them who I am, why I'm here, and that I rely on them. So independent on the person and what there is or what there was, I openly talked to everyone and said, "Hey, hello, this is me. I'm here to help. Let me help you. How can I help you? Where can I give advice? Where do you need help?" And I guess from there, I just started digging into the topics. And then I would say, even if we defined a lot of things, there was operating topics that were coming in all the time. And then I jumped in and said, okay, let's talk about it. And I took the time for a lot of meetings in the first 2 weeks and worked the rest in the evening, I would say. But it was important for me to use the day and to go also in the office in times of remote working. I was super happy that I was able to meet the team there and could make a personal connection. For me, that was important. And then in the second, third week, I started to reach out to the leads of the other departments to say, hello, I'm here, and started to do it this way. And I think I got a good connection to the people and to the departments. After 45 days, I understand the business. I understand where are issues and where we need to look further in. I haven't solved, I would say, all the problems, but I think we have understood the issues already. And the structure that we have presented here helped us, or at least me, to find the right things to look at. And I also have to say, Veronika, for me, it was easier than for you because you came in earlier and you structured already a lot of stuff. So I don't know, what was your first thing you covered?
I guess for me, it was as well communication. Given the new role and given the fact that we are dependent on investors, that we are dependent on banks, I wanted it to be a big bang. So we even did the press release, the thingy. We did a LinkedIn post and the like in order to signal also the wider public there's a new and trusted team member to join. I'm sorry. So you might have heard I have a bit of a cough. And that's why I need a short break and a sip from my tea in the meantime.
Yeah.
You focused mainly on getting to know the team. I did exactly the same as you. But I also had a lot of discussions with the founder, with the other C-level and the investors. And something I believe both of us forgot, there are external parties. So I guess your very first week, you met our future auditors because they will be one of your key relations. And you also met the old auditor who are handing over the case to the newly selected ones in order to understand what is their problem, what did they see as the main challenges of the company, and to hand over seamlessly. Same goes for tax accountants, same goes for lawyers and all the parties that a finance department usually interacts with, making that first impression and maybe extending your hand and making them aware of you joining and you being available for them for questions, for points that the old team was not able to solve with them, would be a great signal. And maybe such a fresh start is something that helps to set up the business relationship on a new level. That's almost a mindset topic, isn't it?
I guess. And build the right mindset is important. So I guess I don't know. I think the both of us, we went in and said, okay, how can we help the company? How can we help the people to make this company successful? And I don't know if this is something that we need to say, but the mindset that you go into a company will have an effect on everything you do. It will have an effect on the team. They will see how you act. And I think it's also our job to show our mindset and to influence people to change their mindset into a direction. Change is good. Change is good. Let's change if it's necessary. And yeah, I guess this is everything we need to say for build the right mindset. Or was there anything else you wanted to add, Veronika?
Well, I guess a smallish part of it, which would mean that sometimes you find out that people don't share the right mindset. It might be with externals, it might be with freelancers, and it might be with team members. There might be different reasons why this company or this person might have been a great fit beforehand and is not now. So within your first 100 days, I guess it's also a time to select your team going forward, to decide whom you want to work with, and probably who is not right at that position at that time and need to either change internally or externally. This is rather like you giving feedback to the team and working on the setup, but you should also watch out to generate feedback for yourself. Most important, in my understanding, would be your employers, which is usually the founder and the investors. Maybe also important external relations. Are they happy with what you're doing? How can you improve? But same goes to the team. You are entering a new team, a new company culture, and you need to make sure that you are a good fit and that you are not negatively impacting a team that previously collaborated well and probably succeeded also. Jan, how did you secure your first feedbacks? Any tips on that?
I guess there was some situation where I did something that I should have talked maybe to someone before, but I've just done it. And then I felt, because I was in the office, I felt something. So I went to the person and I said, hey, this is why I did it. How do you feel about it? Okay, let's talk about it. And I guess I honestly always ask about the things that I do. And I sometimes do them, but the people that are infected, what do you think about this? In the retro was important for me to understand if they were following my decision or not. And of course, you don't always get an honest opinion, I believe, but maybe you get a feeling when you talk to people if this was within their common sense or not. And from there, I don't know, I just say open communication, and also tell people it's okay to have a different opinion. So to encourage them to speak up and say, hey, you do need to be aligned with me. Let's discuss this. Let's find the best solution. Yes, in the end, I take the decision, but you have a fair share on this, and you can influence the decision if you have better data points or a better argumentation. And I think this is what I did. I always said, this is why I do it. This is why I see it this way. This is why we do it this way. I see your point, but this is how I did it.
Yeah, I believe this is the right. Yeah, I'm still on. This is the right way of going forward. I also like the tip you shared, but probably didn't come across today. Ask one feedback from a person you had a difficult time with.
Yeah.
This might be hurtful to you, but it generates immense trust if that person is aware that you've had a bad time with them. And also, that's one of the feedbacks you can learn from best, because actually getting good feedback is something everyone does, but getting good feedback is nothing you can learn from. And generating such feedback that might be costly for you to get and costly also to digest might teach you something about the company or that team member you're having trouble with. That's very worthwhile for your future success there. Well, that's a lot of topics actually we covered, and I also saw the first question coming in from Katrina. I don't know if we're able to hear you, Katrina. Would you want to elaborate a bit, or shall we read out what you wrote in the comment section?
Let's read it out, Veronika. Let's read it out, because there are also more questions in the questions asked that we can't see here as a speaker, but I have opened them. I'm not sure if we can make all of them, but if you have a comment, maybe you can read it out, and because I can't find it now.
So I can do Katrina's because I see that one. Katrina said, reporting requirements would be one of her hot topics, because she said it's important to keep a timeline and inventory of stakeholders who need some sort of reporting, and to have a clear understanding what needs to be delivered to whom and when. She learned that when she was working at an international PE finance function, and I guess from that background, it's very understandable. To my mind, Katrina, you're absolutely right. For us, this was part of monthly closing, but probably we should elaborate on that a bit more. Actually, because it's an important topic. Everything ends everything starts with monthly closing, because if you don't do a proper closing process, you'll have difficulties in doing a proper monthly reporting. If it's quarterly, even better, then you can decide for doing quarterly closing only. Probably the second would be aligning closely with the data department or analytics department, whichever way you call them, because for sure there will be not only financial KPIs, but also business numbers you'll want to report on.
Yeah, I guess from my point of view, if you have a reporting that will maybe work for the first time, but if you don't have any reporting and there's an issue with reporting, then you need to fix it. But for me, the data points behind that is more important than the reporting itself, as long as there is something. But that's my part on it. Yeah. So we have 10 minutes left, so we will not be able to read out all comments, but Luke gave me a hint that there's a question with a lot of likes. Veronika, I will read it out shortly. What is the tech stack tools that you recommend implementing in those first 100 days? Tool to think bank accounts, cash flow, or a tool to play with financial metrics? etc. Maybe my part of this, this depends on the situation. If we come, we need to understand what is there, and based on what is there and on your burning topics, you can go from there to implement tools. So, I mean, a cash tool will help you, or a cash management tool will help you with clarifying the situation on your cash accounts, but it will not help you in the short term to prolong your cash runway. So the tools that you need to implement for me are the ones that affect directly your burning topics. Veronika, what is your take on this? So for us, for example,
I'd say,
it was sorry.
What should you implement in the first 100 days? Probably nothing, because the time is too short for you to understand what is really needed. I'd say there might be some nifty little helpers, such as approve.com to get an invoice approval workflow. There might be some multi-banking and treasury tools that might help you if you have worked with them in the past and already know how they are functioning. But I'd not assume that this is something for the first 100 days, but rather probably for the first year. That would be, in my understanding, a better timing, because just tech implementation is a lot of work, and if not done properly, if not tested properly, it won't bring you any benefit, but it will bring you rather problems.
Yeah. So maybe the take is use the 100 days to identify which tools and which topics you need, and then from there start the implementation of these. So Luke, give us a hint of another question, Veronika. Can you provide some sources, templates, recommendation, reports, or what will help during the first 100 days as a new CFO?
Well, actually, I guess you have to wait for our doc to get finished. Yeah. We did a pretty part of the writing. We're now doing like the boring things, text checking, spelling, layouts and such, but there's an immense, I'd say, master checklist behind it, which would surely help you to get all of those nifty little things aligned.
So yes, we can, and we will in our documents that we will share. And if there's something missing, reach out to us and say, hey, this is something, yeah. Or join the communities and ask your questions there. I guess Veronika is also very active there, and myself also. So if you need help with specific things, let us know. So Luke said, Two more questions and then, or one more question maybe, and then we have to do a short wrap up and then we're done already. This went fast. Let's see. I would have expected to see team, job, and task descriptions on potential new hires or fires within your hot topics. Can you elaborate where you would see that? I guess that's something we covered, right, Veronika? Because for me, this is something the team that brought you there might hold for another few months. And if there's something, for example, really risky that people are like really working against the mission, and then you need to take action. But I would say in general, trust the team that brought it there, and focus on the real burning topics. And I guess if you have someone who's really working against the mission, then you need to act quickly, and no matter the costs in that case, because this is important. Veronika, what do you think about this?
Also, I'd say the same on team. If you don't have a clear indication that someone's not working, that some function is missing for whichever reason, then probably it's not something for the first 100 days to solve, but it's rather for you to understand why has it worked the way it has in the past, and then you can decide on what you want to do against it, or if you need to do something against it. So I'm personally not a big fan of job descriptions. Yeah, we have to make them and Nachweisgesetz and stuff. But I'd rather say, what is the function we need to fill? What is not happening? For example, banking relations are managed by 3 different people. Whoever has time writes to whoever has time on the bank side, and the outcome is shitty. Well, then it becomes apparent that a person doing treasury is missing, and that can be a person of that function, that can be a team member that has expressed the will to learn about a new topic or has a bit more time left from their normal day-to-day job, and that would be that would be the first way of how I'd source for new team members.
I guess
2 minutes left. I guess a very quick question could be the last one.
I think this one is important because we haven't mentioned it, but we have both done it. What about understanding the company values and valuation? This seems key in the first 100 days to make sure you understand shareholders and expectations, and maybe also to take the right decisions. I guess we haven't written that down to understand the mission, right? But I guess maybe that's really true. So we have done that definitely, and you need to understand the business, also the valuation. But that's what Veronika meant with the manage your profitable P&L. With the P&L, you understand the business, you understand where it comes from, and this then goes into that, I guess, right, Veronika?
In one way, yes. I'd say start with cash. If cash is positive, and if you feel you don't have to fundraise in the next, let's say, 6 months, probably valuation is not the biggest of your topics, but rather improving the underlying business metrics, and then you can go out and fundraise. It's always interesting to understand how valuation worked in the past. However, in that current situation, I don't think any relationship you might have had between business KPIs and valuation is valid any longer. So I'd assume valuation is more or less an expression of investor perception of the soundness of your business, and that might have changed tremendously over the last few months. It's good if you can understand how old valuations were built or were argumented for and against. It's probably no indication that in the future the same rules would apply. There are so many more questions, and it's really a pity we can't cover them all. What we can do is we can promise you to deliver the paper at our earliest possibility. I just saw a Slack incoming by a former team member who said, oh, let me do the spell checking and the layouting. So probably this means we get to pick up speed a bit. If you want to preserve your questions and shout them out to us on Slack or via email or following the publication of the document, we're very happy to pick them up. we're very happy to gather additional input. Also, if you say, like Katrina, that reporting topic, I'd like to write a short paragraph about it. Reach out to us. We're very happy to pick that up and to integrate it. Let's stay in contact because that's what CFO Connect is about.
Yeah, and I guess that's the end. So thank you very much from my side as well. It was fun to be here, and I hope that we also shared some good information with you. And I guess the questions were all leading in the right direction. So reach out to us, and maybe Luke and Alejandra can save the questions and share them afterwards. Thank you from my side.